The industrials have been a weak group so far this year. They're trading at lower multiples relative to the S&P 500. So does that mean there's some good opportunities in the group to buy?
I think so. You have to be careful because they do carry a lot of beta, and they're certainly tied to what's going on with the macro events. And we know the macro events are very uncertain, but this group is down, 12% year to date, and there's a big industry conference that's going on this week, and these companies are actually saying pretty good things, actually, believe it or not. Just today, General Electric is talking about double-digit growth in its industrial business, better profitability, better margin improvement. We got very interesting commentary from Ingersoll Rand, also saying they have later cycle businesses, but they are starting to see a pickup in HVAC, and that's not really surprising, but it's nice to get the confirmation. Then, of course, we got Eaton this week buying Cooper. I mean, what's more bullish than them making one of the biggest acquisitions of their entire life, right? So I think there are opportunities. I think you have to pick the right end markets. That's really key. And the valuations, if you can find them with some dividend yield, that kind of helps you a little bit on the downside.
You mentioned M&A, the Eaton deal.
Right.
Do you expect more M&A in this group for the rest of the year?
Well, certainly. Remember, we got ABB buying Thomas & Betts in January, right? So I do think that Hubbell could be certainly an interesting play as well. It's kind of a Cooper-like business, and not as nearly as good in my opinion. And I think that that's an area, HVAC and non-res construction, that's an area where there's a lot of opportunity. So I think you could certainly see it. The one thing that's really important here, though, is that these companies are cash rich. They can do it, right? And I'm happy to see that. So we are getting buybacks and we are getting dividend increases, but we're also getting some M&A that suggests to me that they don't feel that this is kind of 2008, 2009 all over again. Of course, we have to kind of monitor what's going to happen with Greece, right? And what's going to happen with Europe. But if you can find some companies that don't have a lot of exposure to Europe, more US, maybe even China, especially if China is going to be going on this aggressive easing program, which we think that they will, you'll find some names, I think, out there that'll benefit.
I want to mention DuPont. This one is one of the more oversold names in the space, and you've been buying it up this week. What do you like about this one?
It's down 10.8% from its high. It has a 3.5% dividend yield, an ironclad balance sheet, but the most important thing is that they have pricing power. TiO2 pricing, they continue to raise them. They're the only ones that have it, and they got the pricing power for it. Their ag business, their Pioneer hybrid seeds, also seeing very strong pricing. They've gotten price increases in the last 3 years to farmers, particularly in South America. And I like that they've also transitioned to more growth businesses like nutrition, like health, away from commodity-like chemicals. So they'll benefit from lower raw material costs down the road, and you get pricing power, and I think that'll help margins. So the decline to us actually seems a little extreme, and it's trading at a discount now to not only its historical multiple, but to the group, and that's very rare.
And any other stocks in the industrial space that you're picking out on pullbacks?
Well, we were buying more General Electric. Well, at least on the industrial side, we're trying to be careful, but we are buying more General Electric. Again, we do think the dividend yield will go higher in the second half of the year. And Eaton, and when we can buy it, we will, because that just is a powerhouse acquisition for the company. And I think Sandy Cutler is one of the best CEOs in the industry. So those are the three. I think I would also continue to focus on, and we like Boeing. That one is kind of a full position though. But if it falls under 70, I think that's also a buy.
This market is fueled
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to